In this video, we are going to deep dive into Novo Nordisk, the Danish giant of pharmaceuticals. If you're new to this channel, my name is Guillaume Fournier, and on Contrarian Capital, I will show you how I analyze and research stock markets with the goal of beating the market, the S&P 500. In this video, we're going to talk about the business, the numbers, of course, the quality. Is it a quality company, a quality stock? And of course, the value to note at which price it can be interesting to invest in Novo Nordisk if the business, of course, is good. The last event is this stock price, which totally declined, minus 10% in 2024. It lost almost like 20 or 40% in 6 months. It was totally huge. The reason of this is because of less good than expected result on CagriSema drug. It's a new drug that they are working on. They were expecting 25% weight loss, but got only 22.7%. Okay, we're going to talk about it a bit later. The thing with this is Mounjaro and Zepbound from Eli and Lilly, they had 22.5 weight loss rate. So apparently they're working on a new one that could have 24% in 48 weeks against 68 weeks for the others. So it could be a big change and a bit improvement in the industry. And also a decrease in the free cash flow for Novo Nordisk due to a major infrastructure investment to get better delivery for their product. If we compare the stock to S&P 500, over the last 5 years, it totally outperformed the market with plus 247% performance against 96.87% for S&P 500. Okay. So it's companies that beat the market. What says the history about this company? It started in 1989 when Novo Industry and Nordisk Gentoft, two important players in the diabetes, decided to merge. Okay, in 2000, introduction of Novo 7, a groundbreaking medication for the treatment of hemophilia, expanding the company's portfolio beyond diabetes. 2015, it's the launch of Tresiba. It's an insulin degludec, a long-acting basal insulin reinforcing Novo Nordisk commitment to innovation in diabetes treatment. And in 2017, Lars Fruergaard Jorgensen, will excuse me for the pronunciation, became the CEO of Novo Nordisk, making a new chapter in the company leadership. And in 2021, it's the super famous launch of Wegovy, semaglutide for weight management, illustrating Novo Nordisk's expansion into the obesity field and strengthening its position in the metabolic treatment markets. So how Novo Nordisk earn money? First, diabetes. Okay, diabetes is something like 70% of their revenue come from diabetes. So clients pay for a range of diabetes management products, including insulin therapy such as Tresiba and Levemir, and GLP-1 receptor agonists like Ozempic and Rybelsus. These products are essential for managing blood sugar level in patients with diabetes. Okay, Ozempic is one that is even able to change the way that you will have, like, you will manage food. You will want less food, less pizza, less burger. So thanks to this, you will be able to cure your type 2 diabetes. Okay, this is kind of like the promise of Ozempic. So yes, Ozempic is kind of going against all the products that they launched before and against the insulin product, because the goal with Ozempic kind of is to delete your diabetes, while with insulin, you're dependent on it and you need to continue having it. So it's a very ballsy move to create this, okay? They're also in the weight loss industry, which is something like 15-20% of the revenue now. They earn revenue from its obesity management products, such as Wegovy. These medications are prescribed to help patients achieve and maintain weight loss. You need to know that Wegovy and Ozempic, same with Zepbound and Mounjaro for Eli Lilly, they are literally the same thing. It's just that they changed the name and got approval from FDA. They also earn money a little bit less than 7%, something like this, from biopharma. It's generated from the sales of treatment for rare blood disorders, such as Novo 7 for hemophilia. They also sell some medical devices. So clients will pay for medical device related to diabetes care, such as insulin pens and other delivery system to enhance the administration of their medication. Okay, this is the four main, but you need to know something is diabetes and weight loss. It's like 93-94% of their revenue. Who has a client who are buying products? Okay, it's mostly healthcare provider. Novo Nordisk sell its product to hospital, clinics, and healthcare professional which prescribes the medication to the patient. These healthcare providers are key intermediaries in delivering Novo Nordisk treatment to end customers. There is also wholesale and distributors. They work with pharmaceutical wholesalers and distributors who manage the logistics of getting product from manufacturing facilities to healthcare provider and pharmacies. This partner help ensure efficient distribution across various markets. And we have also pharmacies. Company distribute its pharmaceutical product to retail and specialty pharmacies, which then dispense the medication to patients. Pharmacies play a crucial role in the supply chain, ensuring the patient have access to Novo Nordisk product. And also you have government and health system. So here what you need to understand is you don't have a Novo Nordisk shop. Okay, you need all the time to have health provider like a professional in health, a doctor, pharmacist, whatever, between the final client, okay, like the user and the company. Okay, so what are the sales by country? It's mostly in United States with 55%. 22% in emerging market, 12% rest of the world, 4% in Canada. Canada is kind of low compared like to United States. I would expect a little bit more from Canada, and 7% from China. So they're entering the Chinese market kind of good. And if they manage, it can be great because China is a big market for this. The byproduct sales is diabetes cares for 73%, obesity 20%, and rare disease 7%. You have other things, but it's like 1%. It doesn't really count, okay? When it comes to the global market, the diabetes care market is $70.44 billion, actually like end of 2023. It's expected to grow in 2034, so in the next 10 years, at $134.77 billion. Which is a CAGR of 6.7%, which is kind of a good growth for somebody which have 70% of its revenue in diabetes care. When it comes to obesity market, now it's 5.7 billion. It's expected to grow to 55.25 billion, which is a cumulated annual growth rate of 25.5%. Important note, the US obesity drug market is projected to be worth around 28 billion by 2034, with a cumulative annual gross return of 25.67% from 2024 to 2034. So US is the biggest market in this. Is like half of the market for obesity is US. Is huge. So Novo has approximately 50% of the GLP-1 market and 30% of the global diabetes market. Here you can have the comparison between the different products from Eli and from Novo Nordisk. So you have Novo in blue, Eli in red, and you can see that Ozempic is far away, like far in front of Mounjaro. And same, Wegovy is a bit in advance compared to Zepbound, even though apparently Zepbound have a better result. So let's talk about the team now. First, we have the CEO, Lars Fruergaard Jorgensen. Look, I don't know if I say it correctly, but you read it, okay? He's CEO since 2017 and in Novo Nordisk since 1991. He is responsible for the acceleration in the diabetes and obesity market. Like he's kind of his vision for this. Then we have Doug Langa. It's the Executive Vice President, North America Operation and President of Novo Nordisk Inc. Okay, in the company since 2011, and before he was working for 18 years for Johnson & Johnson. So kind of good background. And then you have Karsten Munk Knudsen. He's the CFO. He worked for Novo Nordisk since 2003, and if there is something that you can see about the team, they are very involved and they are here since a long time. Like they devoted probably most of their career, for most of them, in Novo and in the pharmaceutical industry. So that's kind of good sign, okay? What about the owners of the companies? Okay, which is 28%, which is a fund, okay? You have BlackRock for 5%, Vanguard for 2.7%, Government Pension Fund Global for 1.77%, Norges Bank for 1.77%, and that's all. The rest is like under, so I didn't put it, okay? You can do your research for this, but this is the main ones. When it comes to the numbers, when we're talking about growth, we have an outstanding growth for this company in the past, okay? The CAGR for 10 years is 12% revenue, almost 16% for earning per share, and 12.2% for free cash flow. 5 year, it grew even faster in the last 5 years with 25.6 for revenue, 22 for EPS, and free cash flow 14.9, almost 15. And then the last year, like the last 12 months, 18%, 22%, and 8%, and minus 8%. Why minus 8% for free cash flow? The reason is due to a very big investment in infrastructure to optimize and have a better deliverability, because now Novo and Lilly as well have the same problem. They have too much demand for what they can produce and what they can offer. So they need to build very fast new infrastructure to be able to deliver the person who wants this, because the first one will be able to deliver will probably have this part of the market. So they want to go fast. So that's why they invest massively, and it will pay in the next year, because with this kind of thing, you invest once and then you don't really have to pay for the next 10, 15 years. It can last very long. So that's why we have a decrease in the free cash flow for this last 12 months. And we have a predictability of the revenue and the revenue of 4 out of 5, which is an excellent grade. So the global score for the growth is 89%, which is kind of good. For the future, we expect the growth to be around 16%. Some websites are more about like growth focus, 22%. I prefer to be like conservative and put 16%. When it comes to the debt, we have no debt, okay? Net to EBITDA 0, interest coverage 800. So I put 0 because it can be negative, but I just put 0 when it's negative. And debt to equity 50%. They increase a little bit the debt compared to equity, but with this level, like it's nuts, okay? Like they have no debt. When it comes to efficiency, we have great operating margin, and something very good is they are growing. We have growing operating margin, and if you compare the operating margin from Novo Nordisk and from Lilly, they have better operating margin in Novo Nordisk, which is great. Same for the ROIC, the ROIC, return on invested capital. It's better in Novo Nordisk than in Eli Lilly, which is the main competitor. We just need to hope that it will stay around 28%. It will not continue to decrease, because the average like 10 years ago was more around 45%. Now 28%, not really good, okay? And the return on assets, this one is pretty much stable, like from 32% to 27%, but kind of good, okay? When it comes to capital allocation, we have also a great score with the buyback of before. The average in the last 5 years was minus 1% shares bought back every year. Okay, so the number of shares outstanding minus 1% every year. Now they have like minus 0.2%. It's less, but they invest a lot in infrastructure and so on. So maybe we can expect, especially that now the price of the stock have well declined, that they can do some more buybacks. We'll see. Okay, so here I put buybacks, but it's the number of shares outstanding. Okay, when it comes to capex compared to operating cash flow, we had 20% around for the last 5 year on average, and here 30%. So we have more because of this special year. Okay, and stock-based compensation compared to free cash flow is around 1%. So it's kind of good. It's good for the stockholders. When it comes to dividends, we have a low dividend, 1.7% approximately. with a payout ratio around 50%, which is fine for a healthcare provider, especially that they are deep into diabetes, but it could be a bit better. Okay, 50%. It's not super high. Okay, it's totally fine, but could be a bit better. And they have a huge growth of dividend, 18% of dividend growth on average in the last 5 years. So it's good. And they have a growth rate of 27 years. So it's also pretty good, which gives us a total quality score of 90%, which is, to be honest, like a very, very, very good business. Like they have very good numbers. So this is kind of good. What about the strength of this company? First, it's a market leader in obesity and diabetes. And I will even add, it's a market leader with a product that apparently is kind of less efficient than what Lilly does. And when you're a leader with apparently a less good product, it's kind of good, especially that Lilly kind of all the time managed to enter in this market a bit before Novo. But Novo is so trusted that they keep managing to be a market leader. They have a loyal team. As you see, the team has been here for decades. No debt compared to Lilly, okay? Which Lilly has also a low debt, but Novo have even less, so they can probably like even leverage more if they need money and so on. So this can be good. And get great financials, okay? They have better margins, better return on invested capital than competitors. So this is very good. And they have a big and focused pipeline, okay? You probably cannot read everything in the pipeline here. You can go on the website, investor relation website for Novo Nordisk to see the pipeline. But the pipeline is huge. And what you will see, it is mostly concentrated about diabetes, okay? And they are 100% in diabetes, like they're full focus in this. This is where they're good, and this is where they create, let's say, a competitive advantage. What about the weakness? Okay, we cannot talk only about strength, we need to talk about weakness, because every business have weakness. If you're not able to find the weaknesses in the business, I should recommend you to not invest, because it's probably that you didn't understand well the business. First one is Wegovy has weak results compared to Zepbound, which could lead to lose in like less market shares for Novo Nordisk. Then you also have supplies problems. That's why they invested a lot of money this year. You have a declining return on invested capital, even if it's still high. Okay, 28% is still high, but it's declining for the last 10 years, and this is not really nice. Also, Eli and Lilly has a better growth perspective for the next few years. The growth is around between 25% and 35%, while for Novo Nordisk it's between 15 and 25. So you have better growth potential in Lilly in terms of numbers. And they are dependent on key products, which is GLP-1, okay, it's Ozempic, Rybelsus, Wegovy, CagriSema that they are developing. Okay. What are the opportunities? First one is the discovery that semaglutide is also being studied in areas including liver disease and Alzheimer's, and Novo could achieve a strong share in these nascent markets. Because when they did the test and they released Ozempic, first things they realized that, damn, people are losing weight also with this. So let's get approved and create Wegovy and be approved for this. And then after continuing studying it, they discovered that, damn, it could also cure some liver disease. It could also help people to prevent for Alzheimer and so on. So now they are preparing like some new drugs, getting approved to it's in FDA, it's in the pipeline to potentially like get into those markets, which are way smaller than with diabetes and weight loss, but potentially it's market where you can pay more for some product. So if they manage to create some differences between Ozempic and a new one for Alzheimer, it could be a great market share in this. They also have opportunities in oral drugs, okay, because it's more friendly than injection. Injection can be painful. Injection can be a bit problematic for some people. So if they can take pills, it can be better. For now, the Rybelsus, which is an oral drug for Ozempic, like Ozempic, have less good result than injection. Injection is for now better, but they work on this. Also, CagriSema has potentially better results than Depend and should be launched in 2025. The thing we don't say about CagriSema, it's okay, they had 23% weight loss instead of the 25 expected, where Depend, they have 22%. So even with 23%, they are a bit better than Depend, where Novo is already a very trusted brand and in top of the market. So it will sell easier. The second thing is that the study about CagriSema have been done on people which weren't able to leave the study before the end. And 40% of the people in this study had 25% weight loss or more during the time, which is very good, which is the goal is achievable for 30% people. But a lot of them could just stop after 2 weeks, could just stop after 1 month and didn't go to the end of the study. So that can create some wrong numbers. They are doing a new study now, which is way more strict, where people will not be able to leave before the end. And here we can have some good surprise with this, okay? There are new emerging markets as well, like Brazil, Australia. They are like trying to get in other markets, and big investment in production and supply, which could like result to biggest market share. What are the danger now? Patent expiration. Okay, biggest danger for this kind of company. We have Ozempic 2031, 2032, Rybelsus 2031, 32, Wegovy 2031, 32. There's competition with Henlius & Lilly and Sanofi. There's the two main competitors now, but potentially Bristol Myers Squibb and Pfizer for 2029 on weight loss as well. Okay, they're working on it, so maybe they can enter in the market. We could have some regulatory changes, dependence on key product like GLP-1, as we said. Okay, what about the Moat? Morningstar have rated this Moat wide, okay, with a stable trend, which is good. Okay. Studies have shown that a company with a wide moat from Morningstar have tendency to outperform the market on long run. We have increasing the margin year over year, which is generally a good sign of a moat. We have high ROIC, okay, which is also good, and high barrier to entries. Because to develop new treatment, they need to negotiate sales presence, so it can be difficult. Limited competition. For now, you only have two main competitors. They have a big expertise. Okay, they showed that they are able to develop new great product. And also, there is something that we don't talk a lot about, but for the FDA to approve a new drug, it needs to be better than the one or have something more than the one already on the market. But with all the pipeline that they have, the research and the expertise that Novo Nordisk has on this segment, it will be very difficult for new competitors to enter because they will need to develop billions and billions of dollars just to be able to enter. And you don't have a lot of company which can do this. We have, yes, Pfizer, we have Bristol Myers, but we don't really have a lot of companies that have these abilities. Okay. Now let's talk about value. For now, the share price is around 600 Danish crown. Okay, I will not do with the dollar one. I do with the Danish crown now because I don't really buy ADR, but it's kind of similar. Okay, so we're going to do DCF on the for the next 5 years. Okay, so with a starting price around 300, we put 305 Danish crown. The average P ratio for the last 10 years have been 28. We'll see. We'll do a different scenario to understand how it works. Here is the last 12 months earnings. The growth rates. So Guru Focus estimates the growth rates to be around, for the earnings, around 20%. Okay. They even do like 21.3%, okay, 0.8%. So basically like 0.22%. So with this growth rate, if they continue these buybacks around 1% per year, okay, and the dividend continue to grow at 15% per year, we will have a fair value around 881 Danish crown, which is cumulated annual gross return without dividend of 21.8%, with dividend of 22.8%, which is pretty good. Now, here there is no margin of safety. If we take some margin of safety, let's say the PE ratio stay around like 25, okay, or even maybe less, 22. Now we keep the same growth rate, okay, we keep same. We have 16% cumulative annual growth return without dividend, which is also kind of fine. Now, if we take more margin of security in the growth rate, and we don't put, let's say we don't think we'll have 20%, maybe we'll have 20% for the next year. Like the guidance, by the way, from the company is 20%, 25% for 2025. They will do a new one in February to confirm if they stick to 25%. Don't know, 20% margin of safety, so it will put it to 16 approximately. Okay, 16% growth rate is what we had also with EPS here projected. We have a 16% growth rate, a P ratio going to 22, 25. Okay, if it go to 25, we have a cumulative annual growth rate around 14%. If it go to 22, okay, which is kind of the forward PE ratio now is 22, we'll have 11.3% annual growth rate for the next 5 years and 12.7% with dividend. Okay, so here is for the value. So I give a score value of 60% because it's good, okay, but it's not super great. We don't have a lot of margin of safety. So, you know, like for me, it's not like 90% super good value, super cheap. No, it's a good price. Like it's not cheap, but it's not super expensive as well. Okay, so to conclude this analysis, 2024 price drop seems a bit exaggerated from the market, but not too much because the company is back to a good value. Okay, the company is not totally undervalued now. It's around a good value for this. The management has been serious in their previous guidance. Okay, in the last few years, I checked. They said we'll do 22%, 23%. It's what they did. The market did, the company did a bit better. So they're good with the guidance. They have strong financial and a wide moat, okay? And great business if you understand it well, because with all this FDA, the way that they are fully dedicated to diabetes, it's kind of incredible. It's one of the only pharmaceutical company that devoted to this. So it's a good, like it creates some good opportunities and it shows a big commitment and a real expertise in this field, okay? They have now a better price than Eli and Lilly. I think the market is a bit too optimistic about Lilly growth perspective and maybe not enough optimistic for Novo Nordisk. I think the market is like really like giving some better quotes to Lilly's and to Novo. So I will definitely not invest in Eli Lilly right now. But Novo could be considered because like Lilly is way too expensive. So today, even if value seems good, in my opinion, the margin of safety are a bit tight, okay? Important notes, as you saw with the value, I take big margin of safety. Like this, it can be more dissuasive. I invite you to do your own research, to do your own models, to DCF this company and to see what can be possible. But I prefer to have big margin of safety to potentially miss an opportunity than to be too aggressive with this and don't take. Remember, when you want to beat the market, you need to be very selective in your stock. It doesn't mean that I will not invest in Novo Nordisk. It just means that need to pay attention to this margin of safety and to be aware of it. That's all. If you think the margin of safety are too tight, then go ahead. If you think they are good, maybe you can have either some better opportunity or wait that the price get in a better valuation range. Okay, that's all for this video. I would be happy to read your comments. Remember to subscribe to this channel and thumbs up to help the video to get more views and to get the channel to be bigger. Hope you like the video. I will see you in another one. Bye.